Okay, we all know LVB has been struggling for a while. I'm talking about Lakshmi Vilas Bank. There have been numerous financial services companies, NBFCs that have tried to buy out LVB. So Indiabulls, we know, was the first one, which now has a 5% stake in LVB. We had Clicks Capital earlier on in the year. We had SREI. We've had Capri Global, Pramerica Insurance, LIC has a 2% stake in LVB as well. So a whole host of important stakeholders. Now, meanwhile, what's happened to LVB this year? Advances have shrunk from 19,000 to 16,000 because there's no capital adequacy to lend. They've taken a 400 crore loss last quarter. The capital adequacy has gone from positive to negative 2 to 4%. So this is very different to the Yes Bank rescue because Yes Bank at least had tangible net worth. It also had, a fairly strong deposit franchise and a larger one. It also had the minimum capital adequacy requirement of 8%, which cannot be said for LVB, right? So for anyone who's looking to acquire LVB or get LVB now, it's simply a matter of those deposits. They have around 22,000 crore of those. And I mean, essentially, any bank right now, doesn't really matter which one it is, would be more than happy to take on a deposit base of nice granular deposits. So that's what Lakshmi Vilas Bank has to offer. The loan book, might have its own issues in terms of NPA and all that still need to be ironed out going forward. So this is the current condition of LVB, which I've just explained to you. Now, why has the regulator chosen a merger with DBS and not allowed Indiabulls or Clicks, who were the earlier bidders, to necessarily buy this one out? It's because of the banking license deal, right? So basically, Indiabulls and Clicks both were looking to acquire LVB in order to obtain a banking license, circumventing, in a sort, the traditional route, which is via application, and then you have to meet the proper and fit criteria. This way, a company like Indiabulls or Clicks, for example, would straight get access to a banking license, infuse fresh money, and be able to run a bank here in India. So I think that's perhaps why the regulators decided to instead merge it with DBS, because DBS is already a scheduled commercial bank operating in India, so no new license will be awarded. And there's probably a whole bunch of synergies, either on the asset side, on the liability side, on the geography side, or on the network side and the distribution side that, might be yielding some positive outcomes when DBS and LVB are merged. So that's broadly the rationale. Because there is no net worth left in LVB, it's fully eroded. Shareholders are obviously unlikely to get anything out of this. The equity value might just pretty much go to zero, which is why even despite this announcement coming in, LVB has been on 20% lower circuit for 2 days in a row. So keep your eye out on this one. It'll be interesting to see where we eventually wind up, but at least some respite in that LVB has been rescued.